What's up, guys? Corey Hankerson here from Legacy Tax and Financial Planning. How long does the IRS have to collect back taxes? Well, the answer is 10 years. The IRS has 10 years to collect back taxes from you because of something called the Collection Statute Expiration Date, also known as the CSED date, right? So what the CSED is it stands for the concept that the IRS has 10 years from the time a tax liability is assessed, right, in order to collect tax from the taxpayer. Now, what does that mean, assessed? Well, an assessment is when you file your tax return, the IRS processes it and looks over everything, and then they will eventually send you a bill, right, saying that this is the amount that you owe. When you receive that bill, the bill will have a date on it. That date will be the date of assessment, okay? Now, the IRS will generally have 10 years from that date to collect the tax that's due. Except that there are certain things that can extend the statute of limitations. What are those things? Well, I'll give you a couple of examples here. The first is a bankruptcy. When you file a bankruptcy, that will stop the statute of limitations from running for the entire time that you're in a bankruptcy plus 1 year. An offer in compromise. If you file an offer in compromise, that will stop the collection statute expiration date, the CSED. That will stop the CSED for the entire time that the offer in compromise is pending plus 60 days. Various types of IRS appeals will also stop the CSED from running. So the important thing there is that the important takeaway, I guess, is that the IRS has 10 years to collect the tax, but there's certain things that will stop the CSED from running. So you want to be mindful of those things. Now, what's the strategy around the CSED? Well, quite frankly, the strategy is to run out the clock, right? To use up all the time that the IRS has to collect and effectively and legally leave them with no opportunity to collect the tax, right? So how do you do that? How do you run out the clock? The two main ways that people do it is by something called the currently not collectible and by a payment plan. Now, currently not collectible, what that is that's when you get the IRS to agree that although you owe the tax, you have no ability to repay it, right? So therefore, they're not going to come after you with liens, levies, garnishments, and things like that. You still owe the tax, but they're just not going to come after you in an attempt to collect it, okay? So that's a currently non-collectible. That's really probably a job for a pro to step in and handle for you. So the second option that's there is the IRS payment plan or installment agreement. But what type of installment agreement? That's where it gets tricky. There are actually about 7 different types of installment agreements. Only one of them will allow you to ride out the time and run out the clock for collection of the tax. So, give you a case in point. Had a client recently that owed about $100,000 in back taxes. We got the IRS to agree to accept $83 a month as a monthly payment under an installment agreement, okay? So that means that over the course of the year, over 12 months, the taxpayer is going to pay about $1,000, $83 a month, 12 months, about $1,000. Now, we just said that the collection statute of expiration, or CSED, is 10 years, right? So if he's doing $1,000 a year, over 10 years, he's only going to pay 10 grand on a $100,000 liability. What happens at the end of the 10 years? Well, nothing. The clock will have run, the statute will have expired, and the IRS will no longer be required the IRS will no longer have the ability, that is, to collect the tax, okay? So that's the strategy around running out the clock using the CSED date, right? That's a very powerful tactic, because a lot of times people will ask, can I get the IRS to settle or reduce the amount of tax that I owe? The answer more often than not is no, you don't qualify for a settlement, but oftentimes you really might qualify for one of the two strategies that I just mentioned that will reduce the amount that you owe, not necessarily, will reduce the amount that you pay, not necessarily reduce the amount that you owe, right? So a currently non-collectible, or CNC, will reduce the amount that you pay to zero. And this particular type of installment agreement will reduce the amount that you pay significantly as well. As always, if you owe back taxes, I want to invite you to get a copy of my book, End the Tax Nightmare, Insider Secrets to Beat the IRS and Reduce Your Tax Debt. The book can be downloaded for free at endthetaxnightmare.com. That's endthetaxnightmare.com. There is a link to the website below. You can feel free to go down there and click on the link and obtain a copy of the book. All right, guys, that's it from now. Thanks for watching the video. Talk to you next time. Bye.